Good morning. This is Dave Toth with an RJO MRT Technical Webcast update on the gold and silver markets for Wednesday, December 8th. But before getting into this week's setback, looking here at an intraday 4-hourly chart of the gold market, where you see the past couple of days the market's had a little setback. Before getting into the analytics of the gold and silver market, would like to discuss one reason that we think these markets have suffered a bit this week, along with the softs and the energy complex, and perhaps even the equity indices a bit, and that is as a result, we believe, of this scant recovery in the US dollar index over the past couple of days. You can see that by virtue of the market's failure on both a short and intermediate term scale below the 80.05 levels and the 80.05 level and the 79.38 level, the U.S. dollar index has stemmed at least the latest phase of its recovery trend over November from 77.98 up to 81.45. But we want to be also watchful for the prospect that the larger degree setback in the U.S. dollar prospect, that this November recovery is just a three-wave and thus potentially corrective sequence that would expose a larger degree reversal lower. In that regard, and by virtue of the past couple of days recovery, we think the market has defined the 79.06 low from Friday as a short-term but pivotal level. The market needs to fail below to resurrect this intermediate term slide and quite likely resurrect the broader bull trends in a number of the other commodity sectors. By the same token, as long as that 81.45 resistant high remains in place as a cap, we're somewhat afraid of some aimless whipsaw risk from this 81.45 to 79.06 range in the U.S. dollar index that may impact a lot of these other markets in choppy consolidation modes as well. From a longer-term daily log scale chart, you can see with respect to the broader bullish policy or prospects for the U.S. dollar, that this early December setback has thus far stalled at the 38.2% retrace of the entire November rally from 75.63 up to 81.45. So it's entirely possible that this setback attempt is merely intermediate term bull market correction in the U.S. dollar index ahead of a resumption of this bull trend and new highs above 81.45, that, if the past couple of days is any indication, could impact much more negatively a number of the other commodity sectors, the energies, metals, softs, and grain markets, and perhaps even the financials. So while certainly trading other markets, and we want to be cautious about the technical levels and conditions pertinent to those individual markets, we also want to keep an eye on this U.S. dollar index and this recent range the market has defined between 81.45 and 79.06, the breakout from which is very likely to also impact other markets. Now, moving back to the gold market, you can see that the market has set back over the past couple of days, but to this point, it's still got to be taken within the context of not only the past few weeks' bull trend, but the secular bull trend, looking here at a weekly log scale chart that remains dominant. From an intermediate term perspective, we've got, looking here at a daily log scale chart, we've got former resistance from the 1383 area that we believe that has provided support in the first days of December, and we believe must first be approached as expected to hold this support again ahead of a continuation of this past couple of weeks' recovery. From this longer term perspective, a break below the 1350 low from November 26th is required to arrest this latest phase of the bull trend and expose a larger degree correction or reversal lower. In lieu of such weakness, we advise traders to approach this week's setback attempt as another bull market corrective sequence and a buying opportunity ahead of a resumption of the secular bull trend. From a tighter perspective, on a 4-hourly chart, you can see this former resistance, new support in the 1383 area, and that's the level that we advise shorter term traders with tighter risk profiles to pair or neutralize bullish exposure if the market trades below the 1381.5 area. In lieu of such weakness, again, we advise approaching this setback as a corrective buying opportunity ahead of resumption of the bull trend to new highs above 1431. Similarly, looking at the silver market, that equally has had a setback this week with a short-term bearish divergence in momentum below the 29.53 corrective low from Monday. That certainly has stemmed this phase of the rally from the 2640 low from November 26th up to this week's 2953 high. But just like in the previous setback attempt, that third week of November that held the 50% retrace of the preceding 2498 to 2789 rally, you can see that this latest phase of the bull trend from 2640 to 2953, the setback has thus far stalled at the exact 50% retrace of that 2640 to 2953 rally. So we're suspicious that between that 50% retrace and the former resistance new support from the 2789 area, we believe that this range will arrest this this setback attempt and qualify it as just another bull market corrective sequence ahead of a resumption of the secular bull trend. If the market breaks the 2790 corrective low, this area of former resistance, new support, and a minor corrective low from November 30th, then we think the market will have proven enough weakness to warrant neutralizing most bullish exposure, moving to a neutral sideline position to avoid the depths unknown of whatever type of larger degree correction or possible reversal this market might have in store. The more that this market can recover in the days and perhaps even hours ahead from the 2848.5 low from overnight, the greater the likelihood will be that our suspicions are correct, that this setback is just another bull market correction ahead of within the context of a secular bull trend to levels that remain indeterminate. Looking here at a quarterly log scale chart that we discussed in yesterday's report, you can see the market has virtually no levels of resistance prior to the January 1980 high of 4140. We're not projecting a continuation of this rally to such heights, but until or unless the market can prove weakness below recent corrective lows like 2640, looking here at a daily scale from November 26th, and especially the 25, the figure area, former resistance, new support from late October and mid-November, until this market can prove weakness below such levels like 2640 and 25, the figure, the extent to which this market might continue to the upside is indeterminable and should not be underestimated. Please stay tuned to updates on these and other markets on our rjomrt.com website, and good luck with today's trading.